Hey everybody, did you know that your property insurance deductibles can actually make or break your business's budget when disaster strikes? Yeah, I'm pretty sure you did already. But actually today I really want to dive into the difference between single deductibles and split deductibles. And we're going to talk about percentage-based deductibles a little bit too. But before I dig into any of that, my name is Patrick McBride. I am the founder and the agency owner here at the McBride Agency. So let's dig in first of all to that single deductible. These are pretty straightforward. We're used to this, right? You've got a single deductible amount. Let's say it's $1,000, $2,500, whatever it is, and it covers multiple types of damage. Think wind, hail, fire, theft, you name it, right? Simple. But here's the catch. The insurance world is evolving, and the claims rates here in Illinois, as well as the replacement cost and the amount of each claim, the frequency and severity has been dramatically higher than previous years. So we're starting to see single deductibles increasingly become replaced by that split deductible. So these actually separate out your wind and hail damage from other perils like fire, theft, and so forth. You might actually have a different deductible amount for different types of damage. Sometimes you're just going to see that single deductible amount, say $1,000 on everything else except wind and hail, and you'll have a $2,500 or $5,000 deductible on that side. What also happens here is you can actually see a percentage-based deductible, and this is a percentage of your property's replacement cost, not that fixed amount. And that is the percentage of replacement cost of the entire structure, not of the claim. So if you have a high RCE or replacement cost estimate, you could be paying out incredibly more than just that flat deductible. So just as an example, if you've got a building that's RCE is $1 million and you've got a 1% wind and hail deductible, that means you're going to be on the hook for 10 grand before your insurance kicks in. That's incredibly high and something you need to know about. Knowing this in advance doesn't make that sting less, but helps you plan better. Maybe even set aside some of those money for the funds. So here's another one for you, right? Lower wind and hail deductibles are probably going to lean towards higher premiums, especially with, like I said, all the recent claims we've had here in Illinois. So what can you do to save out-of-pocket expenses when you make that claim? You should be and could be paying more regularly in those monthly payments, and you'll save on that deductible cost. It's all about finding that balance between the immediate cost and that long-term affordability. So just to kind of wrap things up here, single deductibles are simpler, but they're becoming less and less common nowadays. Split deductibles can be higher cost depending on your RCE and higher cost when it comes to a claim, but they can drive down those monthly premiums. So take the time to really understand your deductibles, understand that structure, talk with your insurance agent for custom advice to what you and your scenario need, what your business is going to be able to best afford.